This interview is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Welcome back to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Vancouver, and I'm very glad to be joined by Chris Berry, the president founder of House Mountain Partners and also co-editor of the Disruptive Discoveries Journal. Hi Chris, it's great to see you.
It's great to be back.
Now Chris, there's increasing concern over a China slowdown and other worrying trends. What's your general take on the global economy right now?
Well, I talked about that a little bit this morning in my presentation. There are a lot of worrying trends in the global economy. In particular, I've been reading a lot about secular stagnation. Okay, and this is an economic theory that's not new, but it's been repopularized by Dr. Larry Summers from Harvard University. And the gist of it is that we're living in a world that is suffering from slack demand. Okay, and there are a number of different reasons for that to get into right now. But it's a question of slack demand, and also my personal opinion is coming out of the commodity super cycle, sort of 2001 to 2011, you're dealing with excess supply of a whole host of metals and minerals and hard and soft commodities. So there are these twin headwinds, if you will, that are impeding growth. And so what I'm really focused on right now are opportunities in and out of the mining sector that can enhance productivity, because that's the one economic metric that I think you want to follow, where productivity really drives wages, which drives consumption, which is really the name of the game for growth here in the West.
Right, and so are you seeing the consumption coming off or going up?
Well, it's here in the West, in North America, it's obviously coming off a little bit. The GDP numbers that were released here in Canada and then in the United States on Friday were negative.
Right.
And again, it's one data point. I don't put too much faith in it, but the trend is worrying. And of course, you mentioned China in your original question. Again, this is a country that is gigantic from a population perspective, and we all know the statistics. I do think longer term, the urbanization and the industrialization focus is positive for select commodities. I mean, when you look at the World Bank statistics and they gauge and they rate urbanization of various economies, China, according to their statistics, is only about 53% urbanized. And when you talk to demographers, you talk to anthropologists, they'll tell you that an economy is urbanized at about 75% of its population. So for the sake of example, here in Canada, it's at about 81% urbanization. Same thing for the United States. So when you look at China, that's 53% urbanized. To get to 75%, that's about another 250 million people that have yet to live a higher quality of life.
Right.
And so the question isn't, in my mind, the question isn't, is this going to happen? It's just a question of when and how. And you can also look at other countries like India. India is getting a lot of press because some statisticians, believe that they are now outpacing China from an economic growth perspective. Again, it remains to be seen, but that's another longer term encouraging trend in my opinion.
So you're bullish overall on resources long term?
Yeah, select resources long term. I mean, I've been doing a lot of work over the last 18 months with how technology has been affecting various industries and driving down costs. I think that
one of these disruptive technologies?
Absolutely. And disruptive technologies, of course, fracking in the oil space. That's been a huge boon for a country like China that is heavily dependent on imports. But I think, the name of the game in the resource space going forward is finding and maintaining those low-cost opportunities. I mean, you can't count on copper going back to $5 or $6 or $7 a pound anymore. But what you can count on is human ingenuity driving down costs. I talk a lot about the difference between good deflation and bad deflation. If you're Janet Yellen or Mark Carney, central bankers, you're afraid of deflation. But good deflation would, for example, be the decrease in costs of a lithium-ion battery. Okay, that's decreasing on a per kilowatt-hour basis by about 14% per year. The cost of solar technology is decreasing by double-digit rates.
Right.
The cost to sequence a human genome is collapsing much faster than Moore's law. So, throwing a lot of statistics at you right now, my point is that certain costs are going in the right direction to spark productivity and re-spark demand.
Now, Chris, what are you doing with your investments right now?
Well, right now I'm focused on value chains more so than on specific companies. I think a lot of the focus on disruption and what it means, it's a mixed message for the miners. I mean, mining has to get more productive, and the trends are not going in the right direction, generally speaking.
Well, you're seeing like a lot of buzz right now around toll milling because it's one of the biggest challenges is rising costs in the mining industry, but toll milling is like this great new way of reducing costs and controlling
Absolutely.
them.
I mean, you can only cut your selling, general, and administrative expenses so much before there's nothing left to cut. And so, I would find a mining company, regardless of where it is on the value chain, if it's a junior or a producer or a major, finding ways to embrace and leverage technology. I mean, I think it's interesting how so many other industries are embracing technology to lower costs, but you haven't seen a lot of that in the mining space. And I think that's the next great opportunity here.
So what are you advising specifically people to do?
Well, again, my niche, if you will, is the energy metals, and that's really what I'm focused on. I think, we're still going to be in this malaise or this sort of sideways market for the next 2 or 3 years. And I don't have any data or a black box that tells me that. That's just kind of a gut feel when I look at supply and demand dynamics. But again, when you think about societies becoming more efficient and electrifying and urbanizing, electrifying in the sense that they use more electricity, it paints a very positive picture over the next, say, 5 years for copper and cobalt and lithium in particular. The battery business is obviously the huge driver with these niche metals, and again, it's all rooted in technology lowering the overall costs. That's going to widen adoption and make these technologies more ubiquitous. Okay, and now what it means for the miners, to get to your question specifically, it's a mixed message. I would look for either those companies in production or those near-term producers that, again, can guarantee the lowest cost of production and have off-takes in place.
Excellent. Well, Chris, thank you so much for stopping by today. It was a pleasure having you.
Thanks again.